views in a bit, but let's get a global view in now. Robert Sockin is global economist at Citi. Robert, great to have you with us here. Good morning. Prashant this side. So the Nasdaq up 1%, yields on a day when yields went up about 7-8 basis points. But let's just talk about yields, Robert. What is the market pricing? More bear steepening. But what is really going on? Because you had the manufacturing data out of the US which weakened, but markets ignored that. Your thoughts, Robert?
Hello, and thanks so much, as always, for having me. I think it's a very challenging market backdrop to assess and to really make sense of all of these moves. As you noted, first on the economic data side, the ISM manufacturing came in a little bit soft, not drastically so, but still a bit below expectations. But that story's been known for a while, that the manufacturing sector has been weak to moving sideways in the US for quite some time. And there are other data on the manufacturing sector from the PMIs that have been a bit stronger. So even there, we've been getting a bit of a mixed picture. But overall, that's mostly a known story. And I think probably what markets were really reacting to with putting in those higher yields is maybe the potential for a second term of President Trump getting marked up with a higher probability given events in recent days. And most market participants seem to expect that might mean higher deficits and higher debt levels, which put pressure on yields. So I think that might be what we're seeing being digested in the market. But there's a lot of mixed signals going on right now. And there's a lot of important stories between the US election, what the Fed is doing, the underlying resilience of the economy. Going forward, I expect all of those stories are going to be in play in one way or another.
Robert, hi. Good morning, and thanks a lot for joining in. What is your view on how emerging markets like India are going to shape up? Because we have a big union budget upon us. Growth has been relatively good. Inflation has been, sort of tapering off. And in general, the markets continue to be at record highs. How are markets like India positioned now on the economic front?
Yeah, absolutely. And, we've talked about many times on this program how the global economy has been remarkably resilient in recent years. And a big part of that has been the resilience of emerging markets. In aggregate, emerging markets grew about 4% last year. And we're looking for them to grow in aggregate in 4% again this year. So we're not looking for any type of slowdown in the EM space. Now, there is a mix of results there. Some emerging markets slow down a bit, a few pick up relative to last year's pace. But overall, EMs are very well positioned and continue to show remarkable resilience in the cycle. For India in particular, that was one of the best growth stories last year. Data continually surprised us to the upside. We're looking for a very strong year from India as well. And then going into, as you said, that budget season, it'll be interesting to see with the new government what type of additional policies they explore. We think that a lot of the policies that were put in place or being explored by the Modi government in the prior term are likely to continue. And there's likely to be some expansion of policies into other spaces given the coalition government. Overall, though, I think that'll just be an additional positive story for India. And so I think you're seeing that reflect in India equity markets, that you have the positive from before, you get more positive now, and that India is likely to be a very positive growth story this year and for many years to come.
All right. So India is well placed, Robert, as you say it. But what about the mother market? That's the US market. The headline index has done very, very well, whether you look at the Nasdaq or the S&P 500. However, this rally that we've seen in the US market seems to be narrow because the Russell 2000 actually hasn't moved year to date. And even overnight, though the markets ended in the green, the Russell 2000 was down close to around 0.8%. How much of a concern is that? This rally in the US market has been quite narrow, actually.
Yeah, I think in the US market, you're getting a very interesting story where you've had this sort of structural AI factor in the background, broader tech factor that's pushing the market higher. And that can likely continue even if the US economy slows down more significantly as we go into the rest of this year. So you can still get a fairly robust or stable equity market, even in the face of an economic slowdown, most likely, given this structural factor that's working in the background. Now, if you were to get a true soft landing in the U.S., it's possible that you'll get a broadening out of the market. And I think that would very much be the case if you were to get a soft landing, that you would see a broadening out in performance from where we've been. And that'd be very bullish for equities more broadly. So overall, I think the relatively narrow story, as you said, is related to this secular tech story. And really, if you start to get more clear evidence of a soft landing, you could get a broadening out in the market. So I think that's why you're seeing those different factors in the equity market that you noted.
Okay, Robert, we will end the conversation on that note. Thank you for your quick take on the markets and on the global economy. Very helpful there. Let's slip into a quick break. The Nifty continues to be at a record high above the 24,100 mark. But which are the stocks that you need to look at as we begin a brand new day of trade? Coming up in just a bit.